All right, today we're going to tackle a big one. We're diving deep into one of the most important and honestly, one of the most debated companies in cybersecurity, CrowdStrike.
And right off the bat, we're hitting the central puzzle, the big question that gets everyone talking. How on earth can a company be a leader in its field, be valued this high, and still, on paper, look unprofitable? It sounds crazy, right? Well, it's a paradox, and we are going to unpack it piece by piece.
Okay, first things first, let's just get our heads around the sheer scale we're talking about here. CrowdStrike's market cap, it's over $116 billion. I mean, that's not just big, that's giant company big. We're talking Starbucks or Airbus territory. So the question is, how does a cybersecurity company get that massive? To figure that out, we've got to start with what they actually do.
And it really all comes down to their tech. It's not just an improvement on the old way of doing things. It's a completely different approach to cybersecurity.
You probably remember the old antivirus software, right? You'd install these huge, clunky programs that would just grind your computer to a halt. Yeah, that was the old way. Multiple programs, physical server boxes, humming away in an office somewhere. CrowdStrike just threw that whole playbook out the window. They use one single tiny piece of software. They call it a lightweight agent, and you barely even know it's there. Why? Because all the real work, all the heavy lifting, happens in the cloud.
And this is where the magic happens. That brain in the cloud, what they call the threat graph, creates this incredible flywheel effect. Think about it like this. A hacker tries to break into customer A. The threat graph sees it, instantly analyzes how they did it, and bam, it immediately vaccinates every single other CrowdStrike customer on the planet against that exact same attack. It's a network effect. The more people that join, the smarter and safer the entire system becomes for everyone. It's brilliant.
So, that's the tech. It's powerful stuff. But how do you turn that into a money-making machine? Let's get into their business model.
Well, the answer is simple and beautiful if you're an investor. It's all about subscriptions. A whopping 95% of their money comes from customers paying that recurring fee. And Wall Street loves this because it's predictable, stable cash flow. You know what's coming in. And that little 5% slice from professional services, that's often the foot in the door. They'll come in, help a company that's been breached, and then, you guessed it, sign them up for a long-term subscription.
Their sales strategy is legendary. Really, it's called land and expand. It works like this. They land a new customer with just one or two basic essential security tools. But once they're in the door, once you're part of the ecosystem, they start to expand by offering you all these other amazing modules. And before you know it, you're so integrated with their system, leaving would be a massive headache. They make their customers incredibly sticky.
And you want to know how well it works? It works incredibly well. Get this, almost half of their customers are now using 6 or more of their different modules. Like I said, the deeper you go, the harder it is to imagine using anything else.
Okay, so let's circle back to our big paradox. We've got amazing tech, a killer business model, so how can this company possibly be unprofitable? The clues are right there in the financial statements. And you know, you'd think an unprofitable company would be in some kind of financial hot water, right?
Well, think again. CrowdStrike's balance sheet is, frankly, fortress-like. They're sitting on billions more in cash than they have in debt. Their short-term assets just dwarf their liabilities. In fact, they have a cash runway of over 3 years. Let me be clear, this is not what a company in trouble looks like.
And when you look at the trend lines, it's just undeniable. The revenue is just skyrocketing, growing by almost $1 billion a year. And at the same time, look what's happening to that net loss line. It's shrinking, 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 basically hugging the break-even point and even poking its head into positive territory. The direction this is heading is crystal clear.
Okay, so here it is, the answer to the whole puzzle. That loss you see on paper, it's an accounting loss, not a cash loss. See, there are these official accounting rules called GAAP that companies have to follow. And under those rules, when a company pays its employees with stock options, which is super common in tech, it has to be reported as an expense. But here's the kicker. It's a non-cash expense. No actual money ever leaves the company's bank account. But the rules say you have to book it as a loss. That's the paradox right there.
So this is the most important thing to understand. While the official statement might say net loss, in reality, CrowdStrike is an absolute cash-generating machine. We're talking over $1 billion in positive free cash flow every single year. That's the real money they have to reinvest, to innovate, and to grow the business.
So that really solves the profitability puzzle. The business is strong, it's financially healthy, it's gushing cash. But that leads us to the final and maybe toughest question. Is the stock just too darn expensive?
I mean, if you just look at a standard metric, like the price-to-sales ratio, and compare it to its competitors, Yeah, CrowdStrike looks pricey. It's trading at more than double the valuation of its average peer. That's a huge premium.
So, why? Why on earth are investors willing to pay that kind of premium? The answer boils down to one simple, powerful word: growth.
Check this out. The pros, the market analysts, they're forecasting that CrowdStrike's earnings are going to grow by over 65% per year. I mean, that's just a staggering number. For a company this big to be growing that fast is incredibly rare, and that right there is the entire investment story.
And we're not just talking about one or two optimistic analysts here. This is the consensus view. Dozens of them agree. They expect the company to be solidly and consistently profitable within the next 3 years. They see revenue continuing to grow way faster than the overall market, and they believe the stock price still has a lot of room to climb.
So that really brings us to the final takeaway. It's the core tension of this whole story. Is CrowdStrike this revolutionary, game-changing company where the high price is totally justified by its insane growth potential? Or is it a fantastic company, no doubt, but one whose stock is priced for absolute perfection, leaving very little room for any mistakes? Now, just a reminder for everyone, this is all for informational purposes. It is definitely not financial advice. So please make sure you do your own research and due diligence before making any investment decisions.